Well, hello and welcome to the day ahead. It is Monday, July the 11th. I'm Nadine Blaney. Let's get straight to it because Wall Street finished the week flat on Friday. Treasury yields bounced, though, on news of a stronger than expected U.S. jobs report, which does suggest the U.S. Fed could hike rates even higher in a bid to cool the economy and combat runaway inflation. The Dow Industrial Average ended down just marginally, while the S&P 500 dropped about 0.1%. The Nasdaq, though, bucking the trend, adding about 0.1%. Now, U.S. earnings season, the quarterlies, are in full swing. Levi Strauss & Co. surged on news the company's second quarter results beat estimates. Denim jeans and jackets were swept off the racks in the second quarter as people returning to work and social events stuck to comfortable styles that dominated during lockdown. Meantime, Elon Musk says that he's terminating his $44 billion deal to buy Twitter because the social media company breached multiple provisions of the merger agreement. Twitter's chairman says the board plans to pursue legal action to enforce the merger agreement. Well, taking a deeper dive into the U.S. non-farm payrolls, and 372,000 jobs were added to the U.S. economy in June, far exceeding the estimate of 260,000. The unemployment rate held steady at 3.6%, while average hourly earnings came in at expectations. Although the jobs figures confirmed slowing job growth in the U.S., the stronger than expected headline number boosted hopes of a more resilient labor market. Futures market pricing in a highly likely 70-point increase to the Fed funds rate when the Fed meets at the end of the month. Meantime, Atlanta Fed President Raphael Bostic was the latest to throw his support behind a 75 basis point hike on Friday night, making it 9 FOMC members to publicly back such a move. Meantime, New York Fed Chief John Williams spoke on Friday, echoing Fed Chair Jerome Powell, saying the hike could be either 50 or 75 basis points, saying it seems pretty clear that that's what we're going to need to do to achieve 3 to 3.5% inflation by year end. The U.S. 10-year Treasury sitting below the psychological level of 3%. Meantime, in Canada, unemployment data showed a surprise drop in jobs for the month. Total jobs fell by more than 43,000. That was against an expected gain of 20,000. The country's unemployment rate still managed to fall, however, edging down to 4.9%. And the Aussie dollar is sitting just slightly above 68 US cents as we head toward the Australian Open. And speaking of looking at the SPY futures, the ASX 200 is expected to open just marginally higher. We saw global oil prices rise on Friday despite recording a weekly decline. Investors remain weary of a potential recession-driven downturn amid tight fuel supplies. Brent crude rising just over 2% to $107 US per barrel. Meantime, Russian President Vladimir Putin said on Friday that continued use of sanctions against Russia would lead to catastrophic price rises on energy markets, hurting households across Europe. Meantime, the iron ore futures price fell 0.4% to $113.76 per dry metric ton. Base metal prices were mostly lower, copper falling 0.3%, extending its losing streak to 5 weeks. Gold edged higher. And the crypto complex rallied, with Bitcoin fighting to stay above 21,000. And coming up this week on the data front, well, tomorrow we get the Westpac monthly consumer sentiment read for the month of June, plus the NAB Business Confidence Survey. On Thursday, the unemployment rate is out for the previous month. That's coming from the ABS. And looking to the U.S. data docket, Wednesday U.S. core CPI data is released. Thursday, we get U.S. unemployment claims and PPI numbers. And to end the week, we get retail sales numbers and consumer sentiment. And in and amongst that, we get a GDP read coming from China. Well, that does it for the day and the week ahead. I'm Nadine Blaney. We'll see you tomorrow.